How's it going, everyone? It's Sam. Today I want to talk to you about Kadena. Now, this is a layer one proof of work blockchain that a lot of people have been asking me to cover because it is up 900% in the last 30 days. So it's just gone on an absolute tear, 10xing recently. It's actually come down about 15 to 20% at the time of this recording. And I want to cover it for you and talk to you about what it is, and then one problem that I see with it. Now, with that being said, if you guys don't mind hitting the like button, I really appreciate that. It helps out the channel a lot. Also hit subscribe. Also, there is a link underneath the video to sign up with BlockFi. So they gave this out. This is good through Sunday, but they keep on running these. This is the second week in a row that they've run this, where you can get a cut of 5 Bitcoin. So if for every $100 you trade on the platform, you get a cut of 5 Bitcoin. Also, they pay interest rates and bonuses, so you can get up to 9.5%. They actually raised it the last 2 months in a row. So definitely hit that button underneath the video to try it out. Also, if you guys want to know what I'm buying and selling, you can check out the link down below to the Patreon. I tell everyone what I'm buying and selling in crypto and in stocks. So Kadena, a lot of people are calling this the next 10x, the next 100x in crypto. So what is Kadena? Well, it is one of the only proof of work layer ones that we hear about anymore. Of course, there's Bitcoin, but when you think about other projects like Cardano, Solana, Avalanche, those are all proof of stake. Now, of course, Ethereum is also proof of work, but they're switching over to proof of stake here soon when they move over to Ethereum 2.0. But this is actually scalable. So they say that they are capable of processing up to 480,000 transactions per second due to braided chains. So basically they're scaling by building out more and more chains on their network. So this is pretty interesting. Now, they have gone up a lot recently. They list the 3 different reasons for it here. They joined the DeFi brigade. So they are starting to build DeFi, NFTs are coming, and they have new exchange listings. Now, what's interesting about Kadena, though, is they aren't on that many exchanges. I know that they say it there, but if you look at them, they are on KuCoin, and that's really the notable one here. They're also on Bittrex and CoinEx, which most people don't use that I know, but they're on KuCoin. So that's kind of interesting. They're in the top 100, pretty far up there, and they've been getting a lot of notoriety, so maybe that's part of the reason, right? Why? Because they've 10x'd recently, and probably not a lot of people were looking at them when they were 300, 400 million. But they also say they're safer smart contracts, no cost transactions. So it's like 0.00001 cent or something, maybe even less than that per transaction. So essentially nothing. And they say that there's proven security. So their founders actually came over from JP Morgan, and they revealed the limitations of existing blockchain solutions. Now, of course, this is a little bit less decentralized than a lot of other layer ones, but as these projects get started up, they usually are less decentralized, and then that comes with time. Now, the interesting thing is, if they are giving basically 0 transactions, right? If you make 0.0001 cent per transaction on the miner side, how are they actually making money? Because they are making money. If you look here, I just looked this up. If you have one of these KD5 miners, which go for, it's hard to tell exactly. This used one's about $10,000. It says this new one's $50,000, but you can make $422 a day or 150 grand a year. So it would take you 20 days to make up for this used miner that you buy. And if you compare this to Bitcoin mining or something like that, it's an insane amount of money that you are making from this. Now, how are they doing this, right? How are they doing this if they are giving such cheap transactions? Because you'd have to confirm millions of transactions to get paid like a couple cents. So how are they doing this? Well, they have a lot of tokens that they are giving to miners. So you can see their token distribution. So they have allocations, and that's broken down here. It's basically 100 million. Actually, I think it is exactly 100 million. Token pre-sale, 4.5. Future token sales, 5 million. Coin list, non-US, 10 million. Token pre-sale, 2, 17. Community support, 20. Coin list, 20. Then strategic allocations, 23.3. But then they also have 200 million for their platform, and then 700 million into their mining, which we'll get into. So these are highly profitable miners because they are giving so many tokens over to the miners. Let me make myself a little bit smaller here. So this is 2021 through 2040. So they are giving about 1.94 million tokens a month right now, which you start doing the math on that with, let's just say they're $25, right? That's about $50 million that they're giving every single month. So that's a huge amount. And this just continues and continues. Of course, it levels off a little bit, but you can see how much they're giving away and how much the total supply inflates over time. And that's not everything. The Genesis platform emissions are also a large part in it. So these are going towards developers and economic grants, community-driven initiatives, ecosystem initiatives, and major ecosystem improvements. So this is another huge amount that they are increasing the supply with. Now, this was the old form. This is the old distribution model. This is from January, and they said in this article, hey, we're gonna update it because we don't think this is in the best interest of our investors. So instead of 5 years, they moved the adjusted platform emissions to 10 years, but you can still see this is a huge amount of change. Now, they say here that we should be around 137 million or so Kadena out there, but over here on CoinMarketCap, I'm not sure which one's right. They say 157 million. So it's about a 20% difference. I'm not sure, or 10% difference. I'm not sure exactly which one is right, but either way, you can see that it doesn't really matter too much because we're still going to be diluted about 3x over the coming 10 years. So the supply is going to grow by about 200%. We're going to have 3 times the amount of Kadena out there. Now in 5 years, we're looking at just around a double. Now, this can change too. So the emissions are huge for miners, but also huge for the adjusted platform emissions. And this can change. So they state in here that they are allowed to change, like decrease or increase the platform emission in the future, depending on what they believe is in the best interest of the platform. So that's where I get a little bit worried about this because, hey, even if it is this great platform, the fact is they are going to dilute the crap out of you. So if you look back on CoinMarketCap, you can actually see this under circulating supply, there's a low bar. This is how much of the total supply is circulating. You can see that it is very small. You can see even some of these smaller bars here like XRP, it's still close to half, but Kadena is way down there. Now, with that being said, how much does this affect the price? Well, I did some math. So basically, I looked at the best case scenario because, again, I think we're, based on the chart, it said we would be at 285 million, but it also says we're like at 135 million now instead of 157. So I just went with what they said in the chart. If we get up to the 285 million supply that we're expecting by 2025, that means that we would be, if we were at today's market cap, that means that the price would only be about $13, which right now it's around 23. That means by 2030, if we stayed at the same market cap, we would be around $7.4. Now, of course, Kadena is still very small compared to some of the top layer ones. I mean, when you compare a $4 billion market cap compared to something like Solana, sure, it might 15x. But if you're looking at it from a long-term perspective and you think, okay, do I want to hold on to this for 10 years? I don't want to, just because of the huge amount of dilution. Now, if you're looking at it for a quick pump, sure, maybe it's a great crypto to hold. With that being said, though, it has pumped up about 10x, and to get it even in the top 10, it would have to pump up about another 10x from here. So is that likely? Probably not. Is it possible? Definitely. But I am taking my bet on some of these other layer ones that aren't going to dilute me as much. When you consider it compared to like Bitcoin, which has about 10% of its circulating supply to still be mined over the next 120 years or so. Compare that to Kadena, which is going to triple over the next 10 years. It's a huge difference. Now, of course, I'm not telling you what to do. I'm not telling you what to do with your money or your crypto, but that is just something that I think a lot of people don't realize because we are seeing so many videos about Kadena on YouTube. I think a lot of people probably haven't dug that deeply, so I did want to bring that to your attention. Now, of course, if they have more events, of course, it could push up the price more. But let me know your thoughts on this down below. Thank you guys so much for watching. Again, I appreciate it because not too many people like to watch these videos where I'm maybe not super bullish, but I want to bring this to your attention. Thank you guys so much. I appreciate it, and I'll see you in the next one. Bye.